Welcome back to our weekly wrap-up and what to expect. Last week we saw the S&P 500 rise about 1%, but not without a lot of volatility throughout the week. This volatility was primarily due to rising COVID cases, as well as potential vaccines coming out by the end of 2020. This push and pull of COVID-related news has really driven the market to be relatively stagnant in terms of gains or losses, but a lot of volatility throughout the week. So why don't we get started and dive into what happened last week and see if we can determine what's going to happen in the near future. Last week, as COVID cases hit all-time highs, we saw about 50% of US states reverse their reopening plans, or at least pause it to a degree. Now, this is really concerning because that's the last thing we want to see is our economy going into pause again. However, if you look into more depth on each state's reopening plans, a lot of it is actually focused on the restaurant industry and dining indoors. So while this is a big blow to the restaurant industry, thankfully other economies and other industries are still going to be open, such as retail stores and other services. So overall, this is still a setback, but not as significant as we would have thought just by reading the headlines. Another key drawback last week was the news that there was uptick in COVID-related deaths. Now, we've been mentioning for the past few weeks that COVID-related deaths is a key metric that we need to track because it's an indicator of a potential recurrent quarantine or a second lockdown. Now, we should look into the numbers a little bit more in depth because there are some nuances. So let's dive in there. Over the past few weeks, we've been tracking the ratio of the number of COVID deaths per new COVID case because this really tells us how dangerous the cases are nowadays. So when we look at today's numbers, the number of COVID deaths per day compared to the number of COVID cases per day is about 1%. Now, if we look at April numbers, when we were hitting a peak back then, that number was more around 8%. So there's actually been about an 8-fold decrease in mortality related to COVID, which is somewhat promising because that tells us that for the number of people that are getting infected, the number of people that are dying is less. Now, this is likely, as we mentioned before, because a younger population or a less vulnerable population is getting infected, and we also have better treatments for severe patients. So overall, this is promising. The death rate is going down in terms of number of deaths per case. So hopefully this trend will continue even if the number of COVID cases increase. Last week, we also saw several positive drivers for the market. For example, both Gilead and biotech announced positive news regarding their COVID treatments and vaccines. Starting with Gilead, they announced that their drug, remdesivir, which was able to show a reduction in hospitalization duration for severe COVID patients, was also able to reduce the mortality rate of severe COVID patients by 62%. Now, this number is impressive, but Gilead's team did mention that they need to follow up with actual studies to prove this, since this was more of retroactive data analysis. In any case, this attracted investors' eyes, and this was able to instill confidence in investors, which brought the market upwards. Furthermore, biotech announced that they are really looking forward to filing with the FDA for their COVID vaccine. And they believe that they can create hundreds of millions of vaccines by the end of 2020 if the vaccine was approved. So this for sure was able to instill confidence in investors and brought the market upwards, because what this means is there's more confidence in our ability to safely reopen the economy and get business going again. So both of these key pieces of news from these biopharma companies drove up the market last week. And finally, another driver that pushed up the markets was the announcement that there might be another stimulus check coming by the end of August. Now, the details around the stimulus check or the second stimulus check are still in the works, but what we know currently is that it's going to be less than the $1,200 that recipients got previously. and that's going to be more targeted towards those that earn a lower income and also those that are unemployed. So overall, the stimulus is going to be less than what we saw before, but still any stimulus at this time, because of the damage that COVID has done, is positive and will help people survive and be participants of the economy. So that was definitely a helpful driver. Overall, we believe that the general positive drivers of a potential vaccine by December 2020 and also improved treatments for severe COVID cases will really drive up the markets in the long term and really help out with our recovery. If you guys liked our video, don't forget to like, comment, and subscribe. Also, check out our website at www.wx.capital. We have a great subscription service that allows you to get real-time trades as well as market commentary, so you know exactly what's going on with stocks and you know exactly what we're trading and what the next hot stock pick is. See you guys around.